Hello, traders. My name is Anna, and I'm head coach at Leverage. Today is the day four for our risk marathon, a risk management marathon. And today we're talking about adapting risk to market volatility. I do want to say that we are going to look at C trader. So any trades that I take, please, guys, always use your risk, your own risk. Do not copy my trades. This is just for entertainment purposes. Now, risk is what we've been covering all this week, right? So Monday, Tuesday, Wednesday, we covered different topics on risk, and today is really important topic, I think, because adapting to market volatility is something that we need to learn as traders. So risk is about how well you adapt when the market is changing, and if you're a trader today, you should definitely notice that market has changed. And the change sometimes goes because of the different things, right? So why there is volatility in the market. Now, first of all, the news driven volatility. So what happens when there's high impact news, or when there's just news happening, like let's say election on the president, right? So which has happened now, right? So last year we had election in the US, and the market was pretty volatile, I would say. And now we're living in the times where the price is really unpredictable. So the news driven volatility is real and it is happening. And I would say, as for us as traders, the more unplanned the news are, the more volatility normally we do get. And some of the examples I can think of, for example, when the Brexit happened, so when the UK left Europe Union, right? We saw a big, huge movement in the market, and there were traders who won, traders who lost. And that's just normal. That's what happens. But the volatility was caused because of the news. So the market was moving because of the news. Now, the next thing is there's actually low volatility, and that affects traders as well. When the market is just doing the ping pong thing and it's just moving really, really, like not a lot at all. And I will show you those examples once we go to the C trader, once we go to the chart. But from the extreme volatility because of the news happening in the market, we can also go to the low volatility. And normally, actually, this is the time before the Christmas time, so like middle of December and just beginning of the half year. And the traders that I talk to, most of the traders really take time off, completely off the charts, just before the Christmas, and then they come back maybe like mid-January. And that's what I personally try to do as well. I want to take the whole month at least. So 15 December, like half a month, I finish my trading, and then I come back in January. And through that time, you can actually see the lower volatility in the market because there's not a lot of traders participating. So not many are selling, not many are buying. So, and because there's no selling, buying, the market is really not moving much. And another season actually that is very, very common is about I would say normally it's maybe end of July, beginning of August. And that's like where I guess most traders who live in not as sunny places, they go to holidays. So, and again, because there's no buying, no selling happening, right? There's no this market moving, and that's why we enter into that consolidation phase or the ping pong phase. And then volatility between trending and choppy markets. So that's like trending is when there is high impact news, when there's a lot of happening in the world, maybe politically or whatever it is, like also currently because we have the things are not as stable in the Europe, and there's war happening and because of that also market can be very volatile, right? And then choppy markets, again, we need to adjust as traders to those choppy markets. So let's go to the C trader and let's look through these different markets, and now more importantly, how we can manage our risk as traders through these different volatile markets or not as volatile, right? So again, to remind you, whatever I do, whenever I open position, please do not copy. I already have one position open from the yesterday, so I'm going to walk you through the C trader. Right. So this is my C trader. I am on the same account as I was yesterday. As you can see, I am now currently down. So my balance is 96 almost 500. So 96,500. Right. So that means I'm 3.5% down. But because my trade is running in the profit, which is $300, I'm almost like 3.2% down. Right. So how can we adjust when the market is volatile? And I want to talk with from my experience because that's I think what really traders can relate the most when I share my experience. And as a coach in leveraged, it's always really important for me to when I have conversations with the traders, it's always important for me to share my experience because traders can understand traders. If just imagine taking advice from someone who's not really trading, not being active in the market. I think it's not the same as someone who is actively participating in the market and going through all the motions, evolving and all that. So what we are always talking about is how we can adapt, because that's actually like our superpower, is how we can adapt in the different market conditions. Now, my experience is that this year, 2025, started actually everything already happened when the Trump was elected, and my strategy was not liking these pushing markets. So let me go on to 4-hour chart for the EU, for example, right? So what my strategy doesn't like this when there's big push happening and or the big push down, right? I like more markets like, this where we go up, we go down, we go up, we go down. But when this happens, this is not my trading. Like this here, that's not where my edge is performing the best. So I was really struggling. And obviously, as a trader, first things first, I had like this alert in my head, and I'm like, I need to protect my capital. So when you think about protecting the capital first, just so you can adapt to these market conditions, what is it that you want to do? So first of all, you ask yourself how you feel, right? Remember, we talked about it yesterday. If you watched yesterday's video, we always ask the question, how does it make me feel? Am I okay? Keep on putting the same risk on. Do I need to lower the risk? Is it okay if I still trade all the pairs that I'm trading, or do I need to adjust something, right? Do I need to move to a higher time frame? Do I need to look into another strategy, right? So that question is really important. So what I did is I lowered my risk. And actually, I lowered it to zero. And I know it sounds weird, right? How do you trade zero risk? You don't trade in. Exactly. I took time off. I mean, many won't agree with me and say, you're kind of missing out, Anna. Why would you not put even a little bit of the skin in the game? And again, this is what felt right for me. I needed that where I'm completely switched off the market. I don't put any risk on and I'm just detached. And what I did look at the market. I did follow the charts, what is happening. I did my ASRs daily, and like everything was the same. It's just I was not putting any risk on because that's what I needed to do. And now when you see that the market is volatile, now it's you who needs to make decision. What is it that you are going to do, right? So, and that's why it is important. I always try to say that yes, I can share my experience and I have made decisions based on how I feel and based on what's better for me, for my strategy, and for me as a trader. But in the end of the day, it is you who has to make a decision, and it's you who has to really do things how it's going to help you. Because again, I think it's just really, really important to not listen too much to others, right? So I am trying here to give you kind of like a blueprint, right? So what you could do, but I'm not saying you should do this and this. I'm not saying that you should now go and take off completely all the risk, because maybe that's not what you want to do, right? So what I did, I took off the risk, and for about 8 weeks, I just looked at the markets. I watched the markets. I didn't execute trades, but I was collecting the data. And I was looking through, what is it? How can I improve my strategy? How can I improve my trading? Couple of things that I looked for was, can I leave my trades over the night? Can I leave my trades over the weekend? And the data tells me that never, ever leave your trades over the weekend, especially now because of what is going on in the world. We can gap. Remember, like here, right? This is example right here. This gap happened. We haven't pulled it back. We haven't filled this gap. Okay. And there was another gap, I believe, somewhere this one in here, there is a gap right here. We did fill it, which is okay. But like for me, again, I took that time off, completely zero risk, and I just went to look at the markets. Now, when I was ready, what I did on 31st of March, was it 31st of March? How many days in March do we have? Um, yeah, that was Monday, 31st of March. I went in with the risk and I chose to risk 0.10%, right? So that was me adapting my risk to the market conditions because the market is volatile. It still is. It's either pushing one way or pushing another way. And those are not my conditions to trade with because my strategy, my edge works the best when the market is pulling back. So we break, we pull back either up or down, whatever it is. But like I am a pullback trader essentially. So if there is not enough pullback, I end up losing money. So I needed to lower the risk. And for me, comfortable number was literally risking 10 times less what I used to risk and put the risk on the table with 0.10% per setup. Again, some of you will be like, what? 0.10% risk? Why would you risk so little? You're missing out on this and this, But for me, I'm one of the traders, and I remember when I talked about it, how trading should not affect how we're like how we are as people, right? So it should not affect how good of a wife I am or mom I am. Like it should not affect my children. It should not affect you guys, right? So it's like if I'm going on crazy, I don't know, emotional roller coaster, and then in community suddenly I'm like starting to shout at everyone, that's not good, right? And I figured that 0.10%, that was something that I was comfortable with. And now since the May of 1st, I am actually on to 0.25% risk. So going from 0.10 to 0.25. And to be honest, I don't know when I'm going to up the risk. My data doesn't really tell me that I can do it anytime soon, because I'm still seeing like how the market is doing. I'm looking at my data and it doesn't say that I can increase my risk. So you now need to decide if you see that your strategy is not working. Now you need to decide what is it that I can do to adapt to these market conditions. Now, first things first is your risk, right? What is it that you're going to do? Are you going to keep on continue trading the same way, or do you feel you need to lower the risk? Maybe in some cases, when the market is very volatile, maybe you want to increase the risk. I mean, I have never done that, but like I also want to see this as an option because I am really, really open-minded when it comes to like trading strategies, different styles of managing risk, managing whatever it is. Like I'm always really, really open about it when traders want to really try and explain why they're risking less, risking more. Like I'm very open-minded because I understand we are not all the same. We don't have the same risk management, the same risk appetite. Like we're so different. So maybe for you, if you see that the market is very volatile, maybe this is your time. Like, especially if you are a breakout trader, right? So if you're trading breakouts, maybe this is your time to up the risk, right? So I cannot just be saying here, you need to lower the risk at all times, at all times. No, I don't think that's the case. But that's why it is so important to understand how to adapt to the market based on how you trade, based on what your data tells you, based on how much experience you have and how have you adapted the risk before. Because for myself, wherever I struggle and I go through the drawdown periods, then I always lower the risk because mentally it helps me massively. It helps me just to be this, I always say, chill as a cucumber. I'm just chilling. It's fine. If I lose, it's fine because the risk is lower, then it's so small that it doesn't really hurt me. So in that case, I'm just doing what feels right for me, right? But anyhow, let's go into the markets and see what is happening, how we can adapt our risk, and let's see what's going on. Right. So I need to take some trades right on this. So I'm on 15 minutes on GU, and we'll try and find the example. So this market condition in here, right? So if we look, what is going on? We're going down and up, down and up, down and up. So this is a ping pong, right? This is a ping pong thing. Now let's go to a little bit lower time frame just so we can see different type of markets, right? So what is going on here? We're very bearish, right? So in here you can see this was our consolidation. Then we broke bearish, right? And then this is actually like a W, right? Double bottom in here, and then we went bullish, right? So, and what is happening now, we're kind of rejecting this area in here, but technically I think for the way I trade, we should come to this area in here, right? This is our resistance. So now the price is literally in the middle of nowhere. So how do we adapt in this condition when the price is doing a ping pong, right? If you are someone who likes those conditions where you like that there's pullback and you can just like trade, say this is a support and you're just going to buy and sell when it's at support or resistance, right? So maybe this is your edge, how you trade, so you don't need to adapt. But when happens something like this, right, and you're buying in here and then you get stopped out, right, how is it that you adapt? Are you taking an action? How many losses in a row do you need to have to start to take an action? Is it only 3, 5? I don't know. What is your number to take an action? Or maybe you don't need to focus on how many losses in a row you take, but maybe you focus on like how much percentage have you lost, or what's the monetary value that you have lost, and then you feel like, oh, okay. So that's why I gave you example. Like currently I'm like 3% down, almost 3%, no, a little bit more than 3% down. So how do I feel in this? Like yesterday I was only like 2% down. I was like, yeah, that's still fine. Today it's already 3%, a little bit over 3%. So now I need to adapt because the market condition is not in my favor. And now it's time for me to adapt and either lower the risk on or keep on trading with the same risk, but then making sure that I do have that line where I say enough is enough. I either need to step back, start to collect more data, so forward test, or I need to interfere with my risk. I need to maybe see if there's something that I can do with my strategy that involves maybe trading news, right? So I need to, first of all, I need to like see what is going on. If this is not my market, I need to figure out what is it that I can do to interfere. And essentially, my goal is to protect my capital, right? So what is it that I need to do to protect my capital? Now, let's go to 1 minute, because in 1 minute, different charts. Personally, I don't trade 1 minute, right? But let's see what happened here. Big bearish push, right? Big bearish push. If you're someone who trades like a pullback, you're waiting for it to go bullish in here, right? So you're trying to buy in here. Maybe you scroll out, you're trying to buy in here, right? So you're always looking left and you're trying to buy. And in these conditions, this is me, guys. This is literally me, right? So the price will bite me. Like the price will tell me this is time to buy. And I get in here, right in here. So I'm getting in. I get stopped out. There's another area, interest of area. I'm getting in, I'm getting stopped again. And here I'm trying to buy. I'm getting in, I'm getting stopped because there's not enough pullback. So this is not my market condition. And I quickly can make a decision. What is it that I need to do? Let's say I have already lost 3 trades in a row. What is it that I want to do? How does that make me feel? Am I still comfortable taking the same risk? Do I need to adjust? What is it that I need to do? Do I need to step away from the computer for a whole day, 2, 3? What is it that I need to do to make me back into the same mindset or the same state of mind where I was, before this big move happened, before the market volatility kicked in, right? So I need to figure out this for myself. But now let's look at another example. There will be traders who will love these conditions. They will love the breakout. So they are like breakout traders. This structure broken here, they're selling, right? Then this structure breaks, they're selling again. This structure breaks, they're selling again, right? So they're reading market opposites the way I read it. And they are actually really, really happy to trade these market conditions, right? But then maybe something like this happens, right? So they enter this phase, they think this is a break, right? Because you can see this was previous high right here, right? So this broke and they were like, yes, we're gonna buy. They're buying. And then what happens? Market goes back and they get stopped out. And they think, okay, there is maybe another break like in here, right? So this was broken. They're trying to buy in another one, So the ones who are breakout traders, they will love this move. They will love it. The ones who are pullback traders, they will love this move, right? So these conditions of the market. So that's why it's so important to understand what kind of trader you are and what suits you, what kind of conditions suits you. And when you can see that there is a change in the market volatility, right? Then you can adapt and try and figure out what is it that you need to do. Hello, Maxi. Good to see you here. If you have any questions at all, please feel free to ask them. You can either type them in the chat or you can email me to anna@getleverage.com and you can have, we can have a conversation in there. And if you have any suggestions at all, please let me know. But no, basically, this is really, really important for us as traders, is just to figure out when is it that we need to take well, maybe not so much mindset, but it's just looking at your data, looking at your performance. You need to know exactly when you're going to say, well, this is not working anymore and I need to interfere and I need to do something. I need to figure out what is it that I need to do to be able to adapt to these markets. And what I did is obviously not going to suit everyone, right? So I took the time off completely in a way of like trading with zero risk. I didn't put any risk on my trade and I just collected the data to see that there is still an edge. And funny enough, actually, when I took the time off, I did that. Do I still have an edge? And I named my spreadsheet like that, proving that I have an edge. And yeah, and I forward tested for over a month. I think it was 6 or 8 weeks, right? So and then the edge was still there and I'm happy it's still there. But currently, it's not the easiest thing ever, but I'm slowly getting back, slowly trying to get back to my normal risk. And the thing is, I don't know how much long it's gonna take for me to get to that, to get to that same risk where I was like risking 1% per setup. I don't know how long is it gonna take, but I know that I just need to follow the process and I need to see how the market is changing and I need to do my best as a trader, try and adapt to these market conditions, because it is crucial for us as traders to adapt to these conditions. But more importantly is to understand what is going on in the market. What kind of market are we having right now? So like, for example, this one, right? This was such a great setup because we had a support in here, right? I was attempting to buy in here because I thought we are going to have another pullback, but it never happened. We actually broke, came to retest, and then we sold off. And then in here, I was trying to sell as well. And unfortunately, market just turned against me and we went for a deeper pullback. So now we are like, I would say in this area right here, and we have nicely rejected. We have broken the structure. So the market is now moving more in a way where I like it, that maybe not so much I like it. It's just the way where my strategy performs the best, where this is the market conditions where my edge is actually working. So yeah, hopefully you find it useful, and always make sure that you adapt as trader. And first things first is our capital. As traders, we need to be risk managers. We need to protect our capital at all costs. And then I think you need to decide for yourself. And sometimes, you know, I'm trying really my best to kind of give both kind of examples, because not to be so much like, this is just my experience and you need to do it the way I say it. So I'm trying to kind of give both ways, where I say, hey, I need to lower the risk, but some cases you need to up the risk, or I say I need to step away completely, but maybe for you just need to be more hands-on, right? So I think it's just, again, you need to try and know yourself, who you are as a trader and what will suit you as a trader. What is the best things for you to do to protect your capital? So Maxi says, look like a liquidity gap with trapped sellers. Oh, for like the sells in here. I think for this one, support in here. Yeah, well, I got trapped, I was the one trying to sell. Saw the CBD information there were definitely much shop sellers. Yeah, for sure. And I was one of them, you know. And that's it is what it is. But for me, also would always say that even if I lose, even if I see that my strategy is going through like a hard losing streak, right? I think it's always important to see that the way I take my positions is that I always follow my plan, right? And if I follow my plan and they kind of lose, then it is just what it is, you know? So, but yeah, I will finish with this. And tomorrow is our last session for this risk marathon, where I'm actually going to share like a blueprint that you can actually use. It's going to be actually shared on the Discord. So if you're not in the Discord community, please join us in so you can download your blueprint. And I will be sharing that tomorrow. And hopefully that will help you. It's going to be like a summary of all the 5 sessions that we had. And hopefully that will be able to help you to manage your risk a little bit better, or much better, or manage your risk like a pro, you know. But at least my hope is that you will take away something that you will be able to apply into your trading, and that will help you to be a better trader. So thank you so much for joining me today. I really appreciate your time. I hope these sessions help, and I will see you for the last one tomorrow. So take care, and I will see you tomorrow. Bye.